What is up, you guys? Today we're going to be going over Apple, if I think it's a good long-term investment and where, which is the most important question, I would be buying long-term. I feel across the board, a lot of value investors like myself believe that Apple is a phenomenal company. It's a great company to own. If there really was one big tech company that I would own for the next 20 years, it would probably be like an Apple and a Microsoft. However, it doesn't mean that it's at a great price for us to buy long term. You can, like I always say, you can have a great company, but you can always overpay for it. So we're going to go over in this video, hit the like button, subscribe, check out our Discord community down below. It's completely free. Guys get access to free courses, free live streams, free seminars, free webinars. I post all my long-term investments over here at what price I will be buying them at. So go check it out, guys. Let's go through and just take a quick look at Apple. I think everybody knows what Apple does. They have not only the iPhone, but they have tons of computers, iPads, MacBooks, watches and wearables, TVs, services. They have an Apple credit card, so they're getting into banking and Apple Pay. There's a lot to the company, and I feel that you can go find a lot of videos on Apple and what the company does on YouTube, so I'm not going to waste your time by talking about that right now. We're really going to go over if it's a good deal. So looking at how the company makes money, I think it's a phenomenal thing. I think that they have a huge economic moat. The reason for that is that when you think of Apple, like, I don't want to do a whole video right now on economic moats, but an economic moat would be everybody knows that you could probably buy a spec'd out better phone and a spec'd out better computer than an overpriced MacBook, but their brand loyalty and their brand in general is so strong that people don't. I will forever use an iPhone, and I will forever probably have my MacBook, even though I know there are better computers from a spec standpoint out there. So that helps a lot with an economic moat. Now, market cap is a whopping 2.57 trillion. Revenue over the past trailing 12 has been 387 billion. Net income is 99 billion. PE ratio is 25, which is honestly pretty attractive. The 5-year PE is 35.97. Profit margins are 25%. 5-year profit margin is 23.4%. Gross profit margin for the trailing 12 is 43.3. Price to sales is 6.6. And if we look at the income statement and balance sheet very quickly, you can see here revenue increasing every single year, year over year, which is something that we want to see. Gross profits increasing year over year, which is very good, something we want to see. Net income increasing year over year, which is good, something that we want to see. Basically, everything on the income statement is gravy. Looking at the balance sheet, same standpoint. Total current assets is at 336 billion. Total current liabilities is 129, and total liabilities is 278. So even if you were to write a check tomorrow, pay off every single liability that the company has, every single thing, they'd still have $100 billion on the balance sheet, which is just nuts. PE ratio, when we look at the 8 pillars, the PE ratio is 35 for the past 5 years. So while the PE ratio is under 25 right now, which is something I like to see, over the past 5 years, it's not under 25. But still, for me, like, I don't think the PE would hold under 25 or 23 for that long. The 5-year ROIC is 35.3, so that's good. 5-year revenue growth is phenomenal. Net income growth is phenomenal. Shares outstanding is phenomenal. They're not diluting shareholders. They don't have to. And 5-year price to free cash flow is 32.7. So looking at all of this, phenomenal company, as we've said before, right? I'm not saying anything crazy or anything different. It's a phenomenal company, but are we going to overpay for this thing? And that's like the biggest thing that I always look for. So what we're going to do is run low, mid, and high assumptions for the next 10 years of analysis. That's what I'm always looking for. If I'm looking to enter a position long-term, for me, long-term is 10 years. I ask a lot of you guys, what do you think your long-term analysis should be? Like, if so, we could do 5 years, we could do 2 years. But for me, I always look at what's going to be 10 years. So if we look at our low assumptions, 10 years, revenue growth has been 9.6%. 5 years, revenue growth has been 11%. 1 year, revenue growth has been 11.6. As the company grows, it's not going to be able to grow at that insane pace. If they were to do this for another 10 or 20 years at 10% revenue growth, it would be insane. So on the low side, let's say 5% revenue growth 7% revenue growth, and then the high end would be 10% revenue growth if they could actually hold this for the next 10 years. If we look at profit margins, 22% for 10 years, 5 years has been 23, 1 year is 25. So let's just say on the worst side, their profit margin is 15, mid side is 20, high side is 25. Free cash flow has been 25 over the past 10 years. So let's say free cash flow is the same thing, 15, 20, 25. Now, you can see that I'm kind of matching these high numbers with what has been happening over the past 10 years. Because if that makes sense, if that's our high side, which I still think is rather low, if the numbers make sense with a more conservative outlook, then they're obviously going to make sense in every other facet of the imagination. So PE ratio, let's look at a worse of 20, let's look at 25, and then let's look at 30. Because 30 was our PE over the past 5 years, especially 35. So there is a chance that could happen. And then price to free cash flow, same thing, 20, 25, 30. Desired return, I always do 15% because I want to beat the market. Sometimes I'll do 20%. And if you look at this here, based off of the high numbers. Now, I want you to remember, the high numbers is what they've been doing for the past 10 years, right? So it's not like we're analyzing the company as, these are lofty expectations and lofty goals. This is what they've been doing for the past 10 years. If they can just keep doing what they've been doing for the past 10 years, then buying this anywhere under $160 is a freaking steal, which right now we're at 158. So for me, looking at the mid, if I can get the stock at about $100, that's what I really want. Because I think that it's a no-brainer. We can grow at 7%. No-brainer profit margins are going to be 20. No-brainer free cash flow is 20. No-brainer the PE would be 25 at least. And no-brainer the price to free cash flow would be 25 at least. And if you look, we're trading right now at 158. So if we look at the biggest time frame here on Apple, I think there is a possibility we could hit $100. If we look at the weekly chart, if we were to take out 158, that next level is 142. I think that's going to happen no matter what, just looking at the market. And then that next level is down here at the 200 SMA, which the 200 SMA is like 106, 107, 108. So for me, I think that if you're really okay and you believe that the next 10 years they're going to be able to easily do this, you can go buying Apple right now. If you think that you want to play the safe side, I personally think 100 to $115 is the range that I'm going to be looking at. So what I'm going to be doing is selling cash secured puts along the way down there as the market but as the market falls over the next 3 to 6 months, and eventually I'll end up owning some shares of Apple down at 110, $120. And if that never occurs, I'm completely fine with that. So let me know what you guys think. Comment down below. What do you think the proper valuation is on Apple right now? And what percentage of a discount do you need, right? I'm not saying fair value of Apple is $90. I think the fair value is like right where we are at 160. But I want to buy under fair value. I want to get a deal. I don't want to buy it at what it's worth, currently fair value. I want to buy it at a deep discount. So let me know in the description, guys. Thanks for all the support, and I'll see you later. Peace.